The thing that you have to do before you talk about what is happening now, I think it's probably useful to go back and you have to really start at the end of the great financial crisis. There was a bunch of people coming out of the GFC who confused what the US government and some European governments were doing. At the time, there was the risk of a huge financial contagion. And so the US stepped in and the Federal Reserve started to use their balance sheet to buy toxic assets, right? And the ECB did that, and I think Japan did that as well. Anyways, a bunch of banks did it. I mean, a bunch of governments did it. And then there was this body of pseudoscientific economists who coined this thing called modern monetary theory, which basically said, hey, you can keep printing money and introducing it into the economy to smooth things out and to actually drive long-term growth. And it turns out that a bunch of government officials fell for it. And if you fast forward to 2022, so 14 years later, governments around the world had printed something to the tune of about 35 odd trillion dollars of money into the economy that should have never been there. So the thing to remember is we have not necessarily just been obfuscating true supply demand in the last 6 or 8 months when we've been talking about a recession or inflation. We've been actually doing it since 2008. It's just that it's been building up in the system. So one of the things that we have to realize is that all of that money somehow needs to get destroyed in some way, shape, or form if the true economic equilibrium is meant to be found. What is true supply? What is true demand in the absence of government sloshing money around, trying to prop up things that should not be propped up, or buying votes, or all the grifts that these folks have engaged in the last decade and a half have to get undone. So that's the backdrop. So if you think about taking $30 trillion out of the global economy, you're talking about almost, I think it's 85 trillion is the world GDP. So it's almost half of an entire year's worth of global GDP. It's going to take 3 years probably of the slow, meticulous, running off of money, not reintroducing new money. So it seems like we're at the beginning of something that's going to be long and drawn out. And that's separate from whether we're in a recession or not. That's just the bear market that we're in, right? And so you have to look at asset prices today as a microcosm of a much larger trend that has to be about fake money pushing asset prices up, and now taking all that fake money out and finding out what the real price of something is. And I just don't think that takes 6 months. So for all the people that were, fingers crossed, hoping that this would be the end of it, Fed raises 75, we're done with this, they're going to raise 75 more. I just think that's not how it's probably going to be. It's going to take, 24, 36 months. That may mean the bottom doesn't happen for another 18 months. So I think we're in for a lot of choppy market action. I think we have to also be sensitive to the fact that the Fed operates on a certain class of data. And that data in the 21st century is pretty pathetic. Nick, you can probably find this, but there was an article, I think it was in the New York Times, that really walked through how CPI is calculated. And it's a bunch of people that work for the government that walk around with iPads, building relationships with local businesses in all these random places all around the country, and asking them to, chit-chat for 15 minutes and do these surveys. Now, you would have thought that in 2023 or 2022, what the government would have said to, Visa, MasterCard, American Express, all the payment rails, the banks, and Stripe is, send me a feed in the following structured way so that I can actually have an absolute precise sense of inflation, because inflation really only occurs when a good or a service trades hands for money, right? And you calculate what did that thing trade at the day before and what does it trade for today. If you read this article, your takeaway will be, oh my God, this is very rickety, and it drives an enormous hammer that we use to try to manage the economy. That's the first thing. I think you need to buckle your seatbelt, because the next 3, 4, 5 months of CPI will probably be very, very bad. 7, 8, 9%. Why? There are a handful of components that have gotten completely run away. Number one, the biggest one is rent. And so rent works on a 3-month lag. We're going to reintroduce what the true owner's equivalent rent is into CPI. So we can already forecast that CPI going up. Oil is at $105 a barrel. Russia is basically trying to break the back of Europe by now messing with their nat gas supplies. The German energy minister yesterday said that if that happens, it could be a contagion equivalent to Lehman Brothers with respect to energy. When you play all of these things out, what you have is unfortunately rampant runaway costs that really have no mechanism to get back in check in the absence of some real governmental changes. Our policy on this Ukraine-Russia war, how we intend to sort of work or cooperate or fight with China, all of these things have to get solved. So in the absence of that, prices are going to continue to go up. And so what does the Fed do? How does it throw away what little credibility it has left when there's 8 and 9% inflation prints and saying, we think we're done for right now? You can't do that. So they will overcorrect because there's just going to be so much pressure for them to act. All roads, I think, lead to lower equity prices. And I think what David said astutely is we've seen the first wave, but now it has to touch all these other areas. For example, we have gotten totally drunk on debt as a country. One of the most obvious places where we've been serving alcohol far too late into the night is in the financing of all these private equity leverage buyouts. And so if all of a sudden you have some recessionary forces or prices go up and earnings don't, you'll have, a contagion in the debt markets. You could have a contagion in the commodity market.
And if we see a 30% correction in real estate, it could be a real problem, particularly with rising interest rates, inability to refinance.
Bitcoin's price is down 71% from the all-time high, 69K in November of 2021, bottomed out at 17,000 or so. This 3AC, 3 Arrow Capital, they're a crypto hedge fund that was letting people basically loan out their crypto. They are basically closing a $10 billion crypto hedge fund at its peak. They're insolvent, according to the reports. Terra Luna collapsed. The founders and employees of that company are not being allowed to leave South Korea. Doesn't mean they're guilty, but it's certainly not looking good. And there is a whole situation with Solana and a company built on top of it, Solend, which is not Solana. It's an application built on top of it. I talked to Vinny Lingham, our friend, earlier this week about it. They had a whale who had tried to loan out $100 million, and they had to freeze their account because they thought the downward pressure, since there's not many buyers in crypto right now, could collapse Solana. So thoughts on crypto writ large? What is this going to look like, Sachs?
I mean, basically, you had an extremely promising technology. I mean, it is a promising technology.
Of course,
and it is a future, technology platform, but the price action got totally decoupled from the level of progress in the space. And people were not valuing these things based on real customers, real usage, and real use cases, but it became very speculative. And again, all of this was fueled by the excess liquidity that was pumped into the system. So, we've said it before that crypto is like a liquidity sponge. It sucks up, when there's a lot of excess liquidity, it sucks up that liquidity, but now that sponge is getting wrung out. And part of the problem is with interest rates going up, it's one thing when you have negative real interest rates and you can't earn a return on your money, then you start to get, people start to push the envelope and invest in more and more speculative things. But as you can get a real return in, like, let's say there's like a real risk-free rate, now there's alternatives for all that cash. And then you got the problem of leverage as well, which I think over the last few weeks, the crypto space was heavily over-levered and a lot of people got margin called and wiped out.
That's the contagion that's occurred. And people were levered up 5-10 times their Bitcoin on these roads.
Wait till these token sale things get litigated. I mean, the amount of grift by so many of these venture firms in running these sketchy deals where they would put in some amount of money. This is my understanding of the scam because it was explained to me. You put in a little bit of equity at some crazy price, and then you get these tokens, and apparently there's no, you can just sell these tokens day one. And so what happens is you price the equity, but it's meaningless because really what you're getting is the right to get some amount of these tokens. The price is crazy. You sell it, and then you just kind of walk away. And apparently, you do these deals where you just rinse and repeat this thing.
Now that people are losing money, that's when people start suing. I mean, what is it going to look like? What do you think their marks looked like last year versus right now? I mean, and all these coins, like looking back in the rearview mirror and saying, hey, you bought all these coins, you flipped some number of coins. I mean, to your point, Chamath, like what is the litigation path and the shadow economy that was created? What is that
there's an
gonna look like?
article. There's an article, I think it was in Bloomberg, about folks trying to figure out how to get a lawsuit filed against Binance. And the problem was that they didn't even know what entity to sue. It's not clear who owns what and what owns the other and who the ultimate look-through ownership structure is. And it doesn't mean that Binance is guilty of anything, but the article was just showing how there was a U.S. investor who lost $1.2 million who wanted to file a lawsuit, and they have every right to do that. Couldn't even find the corporate entity to actually file this lawsuit against. So if that's what's happening in a $1 trillion market,